Good morning. It is 9:30, Wednesday, October 25th. I've been looking at Dell, looking at, Zephan asked me a good question. If I had one stock to buy, which one would it be? I mean, come on. Is it any question? Apple. Apple would be what I buy. So we went over that. And if you want to watch it live on YouTube, I think it's 43 minutes in. 40 minutes in is kind of where I start the rant. I found out yesterday you can do transcripts on YouTube, and I had an angry old man thing yesterday, so I clipped it. Let's look at a weekly on this one. Here's COVID. Pre-COVID, this was a $159 stock. What makes you think they are that much better today?
I love M&M's.
Than they were pre-COVID? I mean, pre-COVID, it was at an all-time high, and it's 159. Do you think this one deserves that much of a multiple? Listen. You will find a party-sized bag of Peanut M&Ms in my house at all times. They raise the price. I could care less. I am not buying knockoff Peanut M&Ms. Bougie. I am not buying crappy bougie chocolate-covered stuff. I am buying Peanut M&Ms. I am filling my soul with Peanut M&Ms. Does that mean I want to buy this stock at a PE of 18? Hell no. That was about Hershey. And Christian corrected me. Hershey doesn't make M&Ms. Mars makes M&Ms. But my point is, I love freaking M&Ms. So an angry old man episode yesterday. Get off my lawn, kid. That's essentially what that was. I will include that in the newsletter. Essentially, I read yesterday. In fact, I think Google listens to my microphone because I got an article that cocoa was up 45% year to date, and that all the Halloween candy is like crazy expensive. Yeah. Apple. Speaking of Apple, Apple.com. No, we want Apple.com. Stop. They announced an event that is on, I can't even find it. Oh, where is it? It says scary. Here he is. Learn more. 10:30, not 10:30 at night. It's 10:30, October 30th at 5 p.m. It's nighttime. This is kind of what everyone thinks. It's the M3. That's the Mac symbol. So everybody's thinking it's Mac related. Didn't move the stock. Didn't do anything. Right now, Apple is down 1.26%. It's just kind of hanging out just below here, trading range between 170 and 180. That's kind of where it's hanging at. They have their earnings November 2nd. So their earnings are coming up. More than likely, the earnings will disappoint. They'll have a reduction in revenue. We're going to talk about how iPhones probably aren't living up to the demand. It was high demand at first, and then once they got supply chains all figured out, now it's kind of down. So, yeah, I'm just, I'm hanging out. I'm not trimming it. I don't want to trim it at 170. I think it's got enough of a positive. If we go over here to FinViz and we look at Apple, the PE is crazy. It's 26 forward, 29 is the PE. Forward PE is 26. Average target price 199. You're at 173. 52-week range, you're 12% below your 52-week high. Year to date, you're up 33%. So there's been a lot of sales around 170 recently in the month of October. Quite a bit of sales. I mean, look at this dude, Tim Cook, Tim Apple, as we fondly call him forever. $41 million worth at 172. These guys, he's got hundreds of millions of dollars. That's probably just a house in the south of France that he's buying. So there's that. I don't expect this one to move the needle. GM yesterday, their cruise division, they got suspended in California. The state is saying GM misrepresented information, so they can't use robo taxis. They have to put drivers in their cars. Yeah, this was misreported, I think, by a lot of news organizations that says self-driving cars just hit a snag. They didn't. There's still Waymo out there driving driverless. It's just GM Cruise. I mean, let's be honest. Mary Barra is, running this company into the ground. She takes a $40 million a year salary and a 40% year over year raise. and then says she can't justify the cost that the union. Well, you're going to continue having strikes, and you're going to continue running that company into the ground. Take a pay cut, Mary Barra. You don't need that house in the Far East. I mean, come on. So I have a little bit of a problem with her. Let's talk about earnings. Google missed. And Google, it's under $130. Yeah, I think if you bought this yesterday, remember, if you had the algorithm you saw right before earnings, it got you out with a 5.3% gain. There's the algorithm. Got you out yesterday right before earnings. You're welcome. You're welcome if you signed up. I will have the $250 TrendSpider offer probably tomorrow. I will put it in the newsletter. I will put out a special newsletter when it becomes active. It's called a pre-Black Friday sale is what TrendSpider told me. But you'll get my algorithm. What you do is you sign up using my link in Linktree right here, linktr.ee/daily stock pick. Sign up right there. Then you email me. And the email address is right here. And I'll send you everything. But look, Google, clear as day. Got you out right before earnings. And then it just trampled down. You're at 128 right now. Buy it. It's under 130. I'm telling you, this is a company that will be perfectly fine long term. That RSI is down at 29. It is oversold right now. You're under the 200 day. When's the last time you were under the 200 day on Google? The reason it is down is because of cloud. Their cloud revenue declined. I will read you this. Cloud revenue came in worse than anticipated and overshadowed its overall positive results. Earnings per share, $1.55 on revenues of $76 billion, beat estimates of $1.45 and $75 billion estimates. 11% year-over-year revenue growth broke its year-long streak of single-digit growth. So it had double-digit growth. However, where things went south is the segmented revenue. YouTube advertising revenue, $7.95 billion versus $7.81 billion positive. Google Cloud revenue, $8.41 billion versus $8.64 billion. That's where it cost them. Traffic acquisition costs, $12.64 billion versus $12.63 billion. Alphabet's cloud unit doubled overall revenue growth, jumping by 22% year over year, and turned in operating profit versus a loss last year. However, the slightly slower expansion rates concerns investors who fear the company is falling behind AWS and Microsoft Azure. So I'll put a little bit more in there about the AI stuff. As for the company, CFO Ruth Porat told investors that cloud growth remains strong, but customers are pulling back their spending in that area. So overall, big tech continues to live and die by the cloud. Shares shed 6%. We'll go over Amazon because Amazon reports tomorrow, Thursday, after the bell. Microsoft yesterday killed it. Microsoft is up 4%. They're at 344. Hopefully you bought it under 330. Like I said, the algorithm got you in at 316. You're going to cover this gap up to 350. You're at 344 right now. Microsoft reported $2.99 in earnings per share on revenues of $56 billion. That exceeded estimates of $22.65, $2.65, and $54 billion. Total revenues grew 13% year over year. However, Azure revenues jumped 29% year over year, faster than the 26% analysts expected. Excuse me one moment. Hey, stop. Okay, had to yell at the dog. Additionally, Microsoft Cloud continues to help customers drive operating leverage, which is Azure OpenAI service, seeing strong momentum. I'm going to have to stop this because I think the dog may have to go out. I'll be right back. Sorry about that. I hate editing. She didn't have to poop. She was just going to drink water. So Azure jumped 29% faster. Additionally, the company saw commercial office products accelerate despite continued weakness in the consumer segment. Meanwhile, net income rose 27% year over year. The AI-specific tailwinds continue to support the stock with shares up 5% after the bell. You can read about this in the Stock Nerds. Microsoft and Google. It's all right here. You can read all about it. He does a fantastic job. StockMarketNerd.com. I will include this in my newsletter. I won't include all of his charts. I'll just include a link to it. You can absolutely 100% read this. I love his newsletter. I think he does a tremendous job of understanding and looking at all of the fundamentals that you need from every stock that he has. So I like it. I love it. I think both of these stocks, Google and Amazon, or Google and Microsoft, if you are long-term and you are looking to add to a portfolio, both of these are buying opportunities. Microsoft is up 4%. I think anything under 340 at this point, I think you can get it. I think even at 343, I think you're fine buying that one. Google at 126, just buy it. Just buy it. They are not going to have a problem. This is, if you use Bard, I know plenty of people that I've turned Bard onto, and they love it. They love it. It's just it's an amazing integration. Remember, Google has Android. They are going. We talked about Apple having personal AI yesterday, the ability to do that type of thing. Google has what 60% of the world's phone market. So they're even larger than Apple. So they have an opportunity to do it as well. ChatGPT's app is going to be on Microsoft phones. You're going to get that on PCs. You're going to get it, probably in the world where PC kind of stuff happens. But I just don't think that ChatGPT, I think when you integrate it into something else, it's going to be significantly better. So you can look at that one. Now let's talk about Snap. Snap earnings yesterday. There's a 5-minute chart yesterday, what you're seeing on your screen. I'll include this in the newsletter. This is just, so the dark black here, that's yesterday's trading action right there, between about $9.64 and about $10. Snap has been, we can look at a longer term chart. I just wanted to point out the after hours action yesterday. It dipped right before earnings down to $8, and it flew to $12 yesterday. 5-minute chart, that's a 35% pop. If you were Nostradamus, if you could go back in history, if you are Michael J. Fox, and you can just rewind the DeLorean, you'd make 35% in 5 minutes on this stock. It's not legendary. I mean, there's plenty of other legendary ones that are 100% and 400% in 5 minutes. But this one's damn close. So if we go back here, and we just look at Snap, let's look at it on the 4-hour algorithm. Am I buying it right now? Let's look. Because I do think they pointed out in their earnings call. Now it's back at $9.89. It's only up 2%. They made 2 cents per share, which is a positive. Remember, last time they lost 2 cents per share. The stock went from 13. It went all the way down to 9. And you went back up to the 200-day. You rejected off the 200-day. You came back down to 8. You're back up at the 200-day now. I completely expect this one to reject again. Completely. If you hold up above, look at this candle right here. The high, 1087. The low, 987. You're trading right at the lows of the day right now here in Snap. So it's pulling back. You got a gap down here. I don't think this one's filled at 8. I think you're completely coming back down. I don't think you're going to hold that 200-day. If you hold the 200-day for a significant amount of time, and the 200-day right now is at 1025, so you're under it. But if you hold that 200-day for a significant amount of time, that's when this gap up here at 1144 is where it starts, to 1234. That's where that can come into play. Until you hold that 200-day, it doesn't come into play. Now, if you want to read about Snap's earnings, I'll include this in the newsletter. Snap fluctuates after jumping 13% after close in a mid-earnings beat. You can read that article. I'm not a huge Snap. I'd trade it. I wouldn't own it. Let's talk about Spotify. Spotify killed earnings. And I just want to read you a quote from an article I read. CFO Paul Vogel called the quarter an inflection point, saying he expects profitability to continue into the fourth quarter and into 2024. Shares rose 10% on the day, looking likely to challenge their year-to-date highs in the coming days. With the stock up more than 100% year-to-date, investors will be looking for the next catalyst to drive further gains. That's a good quote. I mean, that's a solid one for Spotify. You are probably listening to me on Spotify. You may be listening to ads on Spotify. They all get paid for that. Again, 36 cents per share. That's profitable. Look, they lost $1.69 last time. So I would continue to look at this one as a positive moving stock. I like Spotify. You can look at these upper ranges of 2021 at about $350. You're trading at $166. You haven't broken that 200-day. The 200-day is at 186. If we go over here and we look at FinViz to try and see, okay, let's look at some PEs. Forward PE is 131. This is an expensive stock. 100%. It's up 131%, 113%, excuse me. Target price is 179. The 52-week high is 182, so you're only 7% off. Is it worth taking the risk? Look at this. TD Cowen yesterday, 2 days ago, market performed $129. So it's expensive. If you are going to own this one, I would say trade it. And trade it against that 200-day. If it holds the 200-day, you can expect it to get back to these highs at 250. If it doesn't, just expect it to come back down. And you can use the 4-hour algorithm. The 4-hour algorithm doesn't work great. I mean, I think it misses a lot of the downturn. It kind of gets you into these false breakouts. You can see them right here. It just gets, the MACD hasn't performed well on this particular stock. Maybe the 65-minute. Let's look at the 65-minute algorithm, because yesterday I included in the newsletter a bunch of stocks in the core portfolio that were in the 65-minute. This one, 65-minute got you in at 150, and you're at 167 right before earnings, 150 yesterday. On October 20th. October 20th, it got you in. So that's the 65-minute algorithm. That's a pretty good one, to be honest with you. And that they're Danish, so they reported in the middle of the day, I think it was. But yeah, 65-minute might be a good one to trade. Let's talk about some core portfolio. Boeing. Boeing was up 3% in pre-market. It has lost those gains. It has come back down. It is down 0.48%. 181. I think if you grab this under 180, their earnings were solid. I don't think that they beat, but they reiterated guidance, which was the big one. They kept their cash flow targets. And that's the biggest point for this one. You can see here's a chart of the thing. I'll include fewer 737 deliveries. They brought that down. Remember, they have the problem with Spirit AeroSystems. Spirit AeroSystem, SPR, is the one that really popped. Here's the financial goals. You can read more about it. I'll include this article. I still like Boeing at this price. I mean, we're all going to be flying. They're going to be making maintenance of these planes. They will deliver. They just are sitting on basically planes that are sitting there that they can't sell. So it's not that there's no buyers. They just can't sell them because of regulatory issues, either here or in China. With the algorithm, it got you a buy, by the way, today. Just spoiler in the scans alert. It got you a buy at 182.36. So the one that I'm excited about is Meta after the bell today. Meta after the bell, you're down 2% at 305. I like this one. I've said it. Buy it under 300. Right before earnings, it gets you out here at 0.69%. I don't know that I'd necessarily play the earnings on this one. It is a little bit of a risk. We can go over here and we can look at, let's look at the valuation here. Well, here's a good article that I found. Meta's still a bargain before its earnings. And here's the investment thesis. You can read this if you want. If we go over here and we look at the Meta ratings, Seeking Alpha analysts, buy 3.65. Wall Street, strong buy 4.51. Quant System, strong buy 4.99. You can't get higher than 4.9. It's a 5-point scale. So it's one of the highest convictions of the quant rating from Seeking Alpha. I love those quant ratings. And if you want Seeking Alpha versus Motley Fool, there's a great article, Which Service is Better? I've included that in the newsletter already. So I think it was in yesterday's newsletter or the day before. You can just go over to dailystockpick.substack.com and just look up Seeking Alpha versus Motley Fool. I think you'll find it. But Meta, I say own it under 300. I think my average price is about 304, 305 at this point. I've done several lots where I've purchased it. I might buy it again today. Look at that weakness. I just can't imagine. The only problem that Meta has is spending. And it also has a problem of how well it's done year to date. There might be people who see Meta come out with kind of a meet. maybe they come out. Forward PE is only 17. They don't have a ton to hit. You do have that double top right there at about 325. So you have a 10% top where you have to break through the double top. But if we go back here, let me just go back and rather than a 4 hour, we'll look at a weekly, because the weekly will take you back to the highs of 2021. And that's 372. And what's the average target price? 368. So I think you have those highs in the range if they report well. Seaport Research Partners buy 365 is their target price. That's just from yesterday, October 24th. You don't see a ton of sales here. Well, you do from, Chief Operating Officer, 293. I mean, these douches selling back in August at highs. Maybe they got laid off too. Who knows? But they're probably not selling their entire lot worth. They're just, these guys are buying houses. They live in California. You pay, $5 million for a shed in the backyard. That's what you pay in California. So I'm not worried about it. Long term, I think even if you bought it today at 305, I still think long term you'd be fine. Another earnings tomorrow, Amazon. And we talked about Amazon Web Service. We talked about the cloud businesses of Google and Microsoft. Amazon, I think you're fine in Amazon. I think this 124, you have total weakness going into earnings. There is an article here on Seeking Alpha, 3 reasons why Amazon could beat estimates. And you can read this. I mean, you don't tune into me to just read you news stories. Go and read this. The first is moderate earnings per share expectations. It's moderate. They're not expecting to blow it out. Strengthen the U.S. economy. Prime Day was killer for them. And IT spending rebounds. AWS top line reacceleration. The real bet that you have to take is, did Google weakness on the cloud, where did they go? Did they all go to Microsoft, or did they go to Microsoft and AWS? I think they went to AWS. I think if AWS shows a super strong quarter, this one could be an absolute killer. So understand that Amazon, I think it's my second or third largest holding. I haven't added to it recently. I probably will now that it's at 124. But the problem that I have, the conflict that I have in my own self, and I say this completely honest, it's below the 9-day. And I like that confirmation above the I don't like to trade a downward trend because I don't want to time things. I just don't want to. That's why I say Google, when it regains its confirmation and it starts an upward trend, add. Don't add, today at 127. You can if you don't have a position. I completely support that one. But if you have a position, you want to add when it's on its way up. You want to trim when it loses. When it starts to button hook like that and you're looking at a trim it. But don't add until it has confirmation. You're below the 200-day on this one. But Amazon, I think if you wanted to play earnings on this one, this is the gamble that you take. Their earnings are tomorrow. You're down 3% today. It's at 124. I like that one. Let's talk about social requests. So CJ Baugh wants me to look at EXPI. I had to do a little bit of digging on this one. This is EXP World Holdings. It's a real estate company. It's a cloud-based real estate company. I couldn't find much on it. But I wouldn't. I mean, the one thing that I know, it's a real estate agent that's cloud-based. We'll go over to FinViz and we'll look at the craziness of this one. This is not one to own. This is 100% not one to own. This is 100% one to trade. And look at the volume, how the volume spikes right there, and you get the shoot up. It's hype. And then you get the volume leveling off, and what do you have? You have just a crash. And why do you have that crash? Well, let's go over to FinViz and EXPI. EXPI, the PE, 285. The forward PE, 46. So you think these guys are going to grow faster than Apple? You think these guys are going to grow faster than Google? You think they're going to grow 4 times faster than Facebook or Meta? It's up 29% year to date. Good price. Target price is 22. That is with 3 ratings, 2 from 2021. So Berenberg initiated coverage in July of 2021 with a buy at $53. I don't know where the hell this one was trading, but $53 is crazy. Excuse me one moment. Hey, stop. So I think she's just, let me make sure. Hold on. You're going to hear me talk to the dog. No, go under there. You're fine. She wants me to put her under the blanket. Oh, God. The world of dogs. It's a wonderful thing. I'd trade this one. CJ, this is a trade. This isn't a buy. This isn't one that you absolutely 100% need to hold in your portfolio. Trade it. Trade it on a 65-minute. Let's see what the 65-minute gets you. 65-minute over 8 months makes you 22%. Doubles your buying and holding. And it just got you out with a nice 2% gain. So 65-minute, you're in at 1441. It's at 1427 right now. It's got no upward trajectory whatsoever. Okay, let's talk about scans. The scans, DraftKings, I still hold this one. Why I haven't sold it over 30 and rebought it under 30, I don't know. But let's look at the 4-hour real quick. 4-hour right here. That's part of the paid newsletter. We'll just remove those because that's a reason to buy and sell. But 30 is the price target on this one. This one I bought, I think, at about 25 or so. I should be adding to it. 29.19. You're at 28.50. You're hanging out. You're using this 200-day right before their earnings. Their earnings are coming up next week. I think it's November 2nd post market. So DraftKings buy. Roblox is another one that came up. This is at 32.41. I don't think you want to buy this. I would probably not buy this over 30. So I would wait for it to get under 30. It's got some momentum. It's got confirmation. This is a secondary cross up here. It's not the initial cross up and the initial buy was back here at 27, under 30. Don't be greedy. It's at 32. Don't think you're going to go to 40. I would take and trim your initial buy. If this is a trade for you, trim the initial buy. I think you still have the opportunity to fill this gap up to 37, but it's an issue. I mean, you're just taking a risk. I'd start to trim. I talked about this kind of button hooking here. It faked me out. Again, the algorithm has you still in. Cleveland Cliffs, this is one yesterday. Remember we talked about they blew away earnings, and the reason they blew away earnings, they cut costs. I mean, it's simple. This is not a company that's going gangbusters. You've got an auto workers strike that is affecting the steel manufacturing of Cleveland Cliffs. They expect that strike to be settled in Q4. That strike was escalated yesterday with GM earnings coming in positive and Mary Barra saying, I am not giving money to these people. Yeah, that's essentially what she said. She's just running this crap into the ground. I'm not a big fan. She did not lead the electrification of America in my mind, other than what Mr. Biden, who part senile in my mind. I'm not picking sides. Listen, I voted for Biden, 100%. Just to be perfectly honest with you, I voted for Biden. I think he was the better choice. Is he a great president? No, but definitely by far the better choice. 1565 is the buy on Cleveland Cliffs. You're trading at 1563. So Boeing, we talked about, they had a cross up. It is under 180. The cross up here is at, let's see, I went the wrong way. 182.36, 179. Boeing's just losing confidence from investors. Uber is down again today. Uber 42.79 is where it's trading. The buy-in today is at 44.18. I will probably take another buy on this one. I just continue to think that the theory on Uber is that they will make more than 18 cents per share, and this one will pop again. It's an expensive stock. It's not cheap. If we go over here to FinViz and we look up Uber, the forward PE is 43. So it is super expensive. But I do think that they haven't. This is going down because the only way Uber's going to make money at the ride sharing service, and they're going to blow it away, is when driverless cars come around. So Uber's a little bit of a gamble. I was surprised that SCO has a cross up here at at 1747. I was shocked because I do think that oil's going up. SCO is the ultra short of crude oil. So take it with what what you will. I just report it. I don't write it. ARKG, the ARK funds. I like trading these. I don't like owning them. The problem that I have with this chart is look at that slide. You're not buying into strength. You're buying into weakness. And I don't see enough of a pop up in order to buy. Again, higher for longer is going to hurt the ARK funds. ARKG, ARKW. If I were going to buy one, I would buy, two of the ARK funds. It would be ARKG because I know nothing about genomics. And I think Kathy Woods, her and her team understand that. ARKW, it's an internet ETF. The only reason I got into ARKW, and I think I got into it in 2016 or so, they were the only ETF that held GBTC. So it was the only ETF that actually held Bitcoin. Today, she has a super Bitcoin. And by the way, Bitcoin's up again today. So we'll take a look at Mara. But ARKW, Airbnb is up. BABA is up. A buy. Let's look at BABA because I do think BABA provides a good. The KWeb provided a good. That's got a cross up, and KWeb is the ETF for China. 82.88 on BABA, and you're trading at 81. I think this one goes back to 100 at some point. China's pretty weak, but they're putting money into their economy. I mean, with world politics now, this is the problem that you have with these Chinese companies. It's just world politics. Fubo, Cher loves Fubo. Fubo 256 is the buy on the 4 hour. You've seen this kind of just slow down. I don't have Fubo. I like it. I want to point out a stock, the cruise stocks, CCL. This is a Carnival Cruise Line. This, don't be fooled. It can go down more. This is a stock. This is a company that took out so much cash in order to float their operations through the pandemic that they have so much debt that higher for longer will hurt them. Even though their cruise ships are absolutely packed, higher for longer is going to hurt this company. Even though you probably can't get on a Carnival Cruise Line. Yeah, higher for longer will hurt this company. PDD. And I want to point that out because it's just been, that stock has been a nightmare. PDD, Pinduoduo, they owe Temu. If you haven't shopped at Temu, I like Temu. I need to order more from Temu. They have earnings coming out November 24th. Temu's losing them a bunch of money, by the way. We talked about Carnival. One that I like on the rebound, and this is a good example of a company that got beaten down and is on the rebound, and solid rebound, by the way. An absolute stellar rebound for a Dow stock. Nike. I think it's a Dow stock. They might not be a Dow stock. It might be just be an S&P stock. But Nike dipped down here to the below 90. Below 90, and it just, then it had its earnings, positive earnings. You got a gap up on earnings between 89 and 93. You haven't come back. You still have confirmation. You just zip through that 200-day. I would expect this to see some resistance up here at about 109. It's at 104.14. This is a secondary cross-up. And when we talk about a secondary cross-up, you can see here. So the algorithm has some moving averages in it. And you can see right here, it got you in at 94.84. The MACD was way down here. Got you in at 95.84. And the MACD just kind of tumbles up. Well, the algorithm doesn't get you out because it does include moving averages. But all of the requirements to get back in caused when I scanned it, it said, ooh, it's a buy here. It's called a secondary cross up in my mind. And it says, ooh, it's even doubly a strong move. So understand that's what that is. This has just been a stock that has been solidly moving. But, we contrast that to Carnival Cruise Line. And I'm trying to shrink this down a little bit. Carnival Cruise Line, which has just been negative. Melly is one that I've gone over in the past. This is one that has a cross up here as well. You can see the button hook down at the bottom. Still doesn't have confirmation. 12.22 is the price. It's at 11.98. That's 1,222. GE. This has been a stock that has surprised me, but it's at 113. This has been a stock of the year in my mind from a turnaround perspective. Let's see, where did GE is up 73% year to date. Yeah, that's a solid move. So, okay, I'm done. I will be back again tomorrow. So tonight we have Meta. Tonight's Meta. Tomorrow is Amazon. I like Meta. I might buy more today. Subscribe to, go over to Linktree, linktr.ee/dailystockpick. I will put up the $250 TrendSpider offer when I get it. It will be in the Linktree, so stay tuned to Linktree if you want that offer. Seeking Alpha, it's $189. It's $50 off. I love this service. That's the second link right there. Webull. I don't talk about Webull enough. I have my phone next to me. Let me do a Webull check. Because I put $1,000 in there at the beginning of the year. And I've now got 2,381. So I will be donating the gains to charity at the end of the year. I don't know which charity. I probably won't make that public. But because, if you put $1,000 in there with me, it's up to you. You can trade with me with $1,000 based on my picks and stuff. But Daily Stock Pick newsletter right there. Visible, $20 off. Visible has two plans, $25 and $35. $25 is the one that I'm on. I run this podcast on $25. I use hotspots all the time when I'm traveling. So it's a great service. It's through Verizon. And if you're paying anything more, and that's all in, $25. So if you're paying anything more, look at that. If you're buying a Tesla, you get 3 months free of full self-driving plus up to $500 off. If you use that link, AT&T Fiber at your house. The reason I look so pretty, and again, I say this every time, the reason I look so pretty is because I got gig service at my house. Savvy Trader, if you want to follow my trade, Savvy Trader is one. It's free to sign up. I've got two portfolios, the trading portfolio and the Daily Stock Pick core portfolio. If you're just new to trading or you're new to investing and you want some stocks to trade and stocks that personally, I don't think you have a problem holding for long term, here's 35 positions. 35 stocks that I think are solid companies with solid earnings that you can absolutely 100% hold. I update this probably once a quarter. So if you subscribe to it, don't expect a ton of activity. The trading portfolio, I maybe trade once a week. I'm not trading a lot. And let me go over my philosophy on why I'm not trading a lot. And it's because of you douches. So as a trader, you want to establish ground rules and you want to establish systems. My trading system was always, let's trade in the morning. And when I trade in the morning, that's because you have volatility. You have all of the opportunity in the morning. In the afternoons, you just don't have the volatility. So for long term, you do want to invest in the afternoon. You do want to buy late in the day because you want that volatility to shake out a little bit. For trading, you want to trade in the morning. That's because the volatility. That's why Ninja Trader, Warrior Trader, I think his name is, Ross Cameron, he turned, $10,000 or $100,000 into $10 million by trading in the morning. And he uses just crazy. If we go over here to stock websites, pre-market movers, investing.com, investing.com/equity/pre-market. You can look at all the pre-market movers and look at, 40% change, 15, 32%. Most of them are biotech, and you get them, you swing them. Swing them for 1, 2, 3% gains and you get out. You're happy with any gains. You're happy with any gains. That's what that is. And that's how he turned, $10,000 into $10 million. I think he wound up blowing up his account a couple of times. But with no risk comes no reward. So any questions you have, hit me up on the on any of the socials. All of the links are up there up top. If you don't have socials, you can hit me up on email, dailystockpick3@gmail.com. Okay. I will talk to you guys tomorrow. See you. Bye. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily Stock Pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter.
through my hopes and fears.